Hello, investors and traders, and welcome to the weekly market report with the Market Guys. I'm AJ Monty. Well, the market's had its usual volatility. We started the week off with a positive and then came right back down Tuesday and Wednesday. Thursday, we started to show signs of a breakout over resistance. And then today, Friday, as I do this recording, we pulled right back down from resistance. So if I zoom in, let me give you my spin on what I think is going to happen for next week. We are still stuck right at that resistance area that I just mentioned. And my original forecast from last Friday was I thought we would be able to break through this. Now on Wednesday, we showed a hammer pattern right there on high volume. And when you see these long shadows underneath the candle, it tells us that the buyers are fighting back to try to get it up to the higher levels. The added volume tells us that the buyers were motivated on that day. However, the very next day on Thursday, the volume dropped, and then we saw another drop in volume on Friday with a red candle. That red candle there tells me that the buyers were not willing to hold their positions through the weekend with the economic news that was released this week with the unemployment numbers coming out. And what I believe is going to happen is I'm going to continue this line. I'm going to move this over. I do think that we're going to make another attempt to break through that resistance. So I'm going to draw this trend line just like this, keeping that line at the same angle of the current trend, the upward leg that we see right here. So I'm going to leave that in place for next week, and we'll have to see what happens from there. If we look at a more broad-based index in the Russell 2000, we saw the same thing happen. The market came right to resistance, pulled back, and then we saw this big red candle again as the long positions got out to neutralize positions over the weekend. So we'll have to see whether or not we go back up to test resistance. I think we will. So I'll remove this line and then leave the most current line that I drew right there for next week's report. Now, our percentage of accuracy for this year is over 90%. And what I'm expecting is every now and then the markets will not move according to the way we expect it to. But the good news is the charts tell us exactly where to get out if, in fact, the market moves against us. So in other words, if you know where support is, say in the Russell 2000, if support is right around 960 at that low, and the markets start dropping below that point, then that tells me that all bets are off and you're going to have to get out of any long positions and move to cash just to protect yourself. So keep that in mind. This is a low that we want to pay very close attention to. I'll mark that for you right around 960, and this will leave as the forecast for next week. Now if we look at the Qs, that's the power shares, more or less representing the NASDAQ market, we did close below the support level on higher volume. So the Qs are looking more bearish than bullish. I'm not going to put a forecast on here because we have to see whether or not we move back over that support level, and we have to see if that volume bar drops. If the volume bar drops, that tells us that the sellers are starting to slow down, and then we'll draw this as the support level that we'll see whether or not that tests. Okay, if we move on to the spiders, that's ticker symbol SPY. We had another down market, but the market stopped right at that key support level that I mentioned from last week. I'll leave that in place, and I'll move this line right here because I think we could see a test, maybe a little bit of a breach below that support. We'll have to see what the volume looks like then, and then I think we'll move up from there as we see the buyers start to move in. What I believe that will happen is this gap area right here is still unfilled, and 80% of the gaps do fill, so I'm still using that as a magnet. I don't think we're going to be moving into another upward trend. In fact, what I believe will happen is we'll see another high form, but it'll be a lower high from the previous highs. And that's what we're looking at right here. We're seeing progressively lower highs, and I think this is all matching with this resistance point right there. Now finally, the VIX. The VIX is stuck within this range. We see a resistance area right here. We see support here. I thought the VIX would drop. It did not. So what I'm going to do is remove those lines right here, and I'm going to draw what I believe will happen with the VIX. I think we'll go up just a little bit, and then we'll start to pull back as we move to go higher in the S&P. So this is really very interesting because we have some mixed signals, both with the SPY, the Russell 2000, the Qs, and everything is now relying on the technical signals to see whether or not we're going to bounce off of support or pull back from resistance. We have to wait for the breakout to occur before we can go back into any longer term strategies. If you'd like to know more about what I've just mentioned, go to the Market Guys website, click on the video link right there, and you will be brought to a library of short videos that we call Market Shots. Just scroll down, pick the topics that you'd like to learn about. These are very short videos that last anywhere between 3 and 7 minutes, and you can take it one step at a time. Again, we work around your schedule. That's why these are recorded. You could fit these in anytime during the week and just move on from there. Have a great weekend, and we'll speak with you soon. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.